Hey folks, it's Vic Noble here with a weekly trade example for the week ending April 22nd of 2011. And today I want to talk about trend trading versus counter trend trading, which is the right way to go, and all that kind of thing. Well, first of all, I'll tell you right now that there's no right or wrong answer on this. Okay, I teach both because they both have their merits. Trend trading is some people like counter trend trading, other people prefer to trend trade, and some people like to do a bit of both, which is my own approach. I think there's so many opportunities, and I'm going to show you this day in particular. This is the Canadian dollar pair, and by all accounts it's going down pretty hard. It's so a trend trade would be to be selling this thing, okay, until the whole thing turns around. I'm going to look at this day right here on the 20th, and we're going to go down to a 1 hour chart, and I'll show you. Well, this is a trade that I actually took, so I know I'll show you how this thing worked, why I did it. This 95.50 level was a level that interested me as price was rallying up here, and the reason is because it used to be support in here. You see that? And so once it's support and it breaks it, I expect it to become resistance. It may or may not, but I want to find other harmonic levels of Fibonacci's in there, other reasons to expect to sell it there. One thing too to know is whenever you're at the even numbers like the 9600, 9700, and 9500, those are usually reaction levels. Look what happened when it hit 9,500. It bounced up like this. Look at this 9,600 level, how much support it was in here. This is 9,650. See the 50s in here? A lot of reactions. Here's 9,700 up here, 9,650 again when it came down. It just happens over and over again. So pay attention to those. That's another reason why I was looking at resistance up there. If we go down, now I've drawn a fib from this high to this low. Here's 38%. That could be 38% is a really good place to look at on these initial big moves down. It may or may not make it there, but I'm going to show you why I took it a bit earlier in here. And it had to do with, let's go to a 15-minute chart. And it was, coming up into here. This is when I was coming into this. What had happened is London was closed, New York was wrapping up, and what happens in the daytime is price gets quiet, and it's unlikely to really be heading up and making further highs. And what I was looking at was from this low up to this high, we had a Fibonacci extension right up at this 96.50 level here. You see that? Which was also these old lows. And I also noticed, so this is a 127% extension of the move from here up to here. From this swing high, and you can measure fibs from this high down to this low, from all these other highs, but I noticed that from this little swing high down to here, we had an exact matchup. You can't even see it actually. I'll just move it off a little bit, at 96.50. So my thinking was, well, it would be a good sell at 96.50, and if it went above this level here, I'd probably want to be out. So really, I had 20 pips of risk in the trade, and that was it. Don't forget, I'm not trading a 15-minute chart. I'm trading a higher time frame, 1 hour chart, and I'm trading in alignment with the daily trend. I'm trend trading, okay? But I'm watching a counter trend move during the day to get short. I'm not trading a counter trend. I'm trading it with the trend on a higher time frame, with very small risk though. And there's where it spiked up into 96.50, bobbled around for a minute, and this thing really got some legs on the way down here after a while and took off. And there's, by the way, very, very, very good ways to predict where this thing's going to end as well. Okay, again, using harmonics. In fact, I'll just show you here quickly. If we look at this rally from here up to here, you'll see that this level, just 1 second here, this level right here is one place where we could expect some support to happen. Now, I want to go to a 1 hour chart because it actually shows up more clearly. I won't spend too much time on this one, but if I look at this swing, as price came down, here's that same level I just showed you about. But what I'd like to find is some harmony, another Fibonacci level that might match up. And as price moved down in here, if you look at this swing from here down, remember we looked at this earlier? I want to show you that it came down to around 53. So within 7 pips, that's a very nice little place to expect price to support. This 162%, by the way, is a 162% retracement of the move from here up to here. It retraces 100% and keeps going, 127, and then 162%. These are very, very good levels to watch. They're like a reverse Fibonacci. Chris Laurie calls them deep Fibonacci zones. And look at the bounce off of there. Another trade that was taken, by the way. So Really good move. Now I'm going to show you an example of a pure counter trend trade and show you the merits of those. And for that, we'll go over to the British pound trade that we had, a real nice one on the 20th of, it was actually this day here, the 21st, pardon me, of April, yesterday, Thursday. First of all, you know what? Look at how see this resistance level here, and see how it gets hit here again. Look at the reaction here. Look at how prices, MACD is going down while price is going up. This was a great sell right in here. And by the way, I just want to show you something. If I draw the fibs in here, this is where you want to take your profits. Look at the old resistance now becomes support at these levels. Excellent levels. I'm going to show you something else. This wave is related to this wave. This is very interesting stuff. From this high to this low, you'll see that the 162% retracement came all the way to here. Now look at this move up. Going short would be counter trend. I think you agree, right? This was also a monthly pivot up here. And guess when this happened? It happened at the London close with a very extended range. It had gone way beyond what it normally does. If we go to a 15-minute chart, this set up a classic London close trade for us, and lots of people got this, by the way. Great way to go, you guys that did. And here, look at that, and we even had divergence on this too. If you look, you'll see that we had price going higher, MACD going lower. We sold this rally right into here, right up over just over 80. 65, 81, some people got 82, 83. It went as high as 85, and look at the move down. It was an absolute classic. Lots of pips in that. So there's a counter trend trade, but we're doing it because we're at a time of the day when we expect it to react negatively. We're at a resistance level on a higher time frame with those with the Fibonacci extensions that I showed you, and the monthly pivot and all that kind of thing, all acting together to give us good reason to expect a counter trend. Throw in some MACD negative divergence, you got a great trade right at the London close. Perfect. So there's an example of a trend trade that we saw in the Canadian dollar and a counter trend trade here in the British pound. Like I say, they both have their merits. Don't get all hung up on which is better or worse. Like I say, I teach both because I like both. I think they both have a great fit into anyone's trading plan. Not that you have to do it, but if you want to trade both, there's some excellent methods to do it. And learning about all these harmonic levels can really help your trading. All right, that was a bit of a mouthful today. Have a great Easter weekend, everybody. Some time off, much deserved by everybody. And we'll be back again next week with another weekly trade example. Thanks so much.